Good evening, ladies and gentlemen. Welcome to 10 stocks that I wanted to dive into in kind of this tandem conversation about manipulations that go on in the stock market in this day and age of 2024 and how skewed and unsimplified things have truly become. We're going to look at everything from real estate investment trusts to the telecom giants to tech companies and just kind of review the things that these companies do that are, somewhat nefarious. And if you are an individual shareholder and you're blinded by this stuff, it always kind of reminds me of like the Warren Buffett style of investing, right? Like you want a company that's so easy to understand, it's so simple that an idiot can manage it, because eventually an idiot is going to be managing it. And that's something that we're going to learn as we look deeper into this. We will be talking about Tesla here as well, because there's been a mass amount of manipulation through, a bunch of media headlines when it comes to this one. There's so much we're going to get into this video. So if it's a conversation you appreciate on this path to the AI revolution that could very likely destroy the entire fabric of capitalism as we know it, consider subscribing to join me on this journey to financial independence, to perhaps hope that there's going to be a day where we retire early. But getting into it, I really like these REITs because I think they're good exemplifiers of a lot of the complexities that go on in the stock market that people always come up with the same questions for. And I want to point a few of those out when it comes to, the constant dilution, the fact that the stock has been able to go up against an insane amount of dilution. This beautiful dividend yield right now of 5.8%. So the stock has dropped off about 10% this year. We got to kind of ask ourselves, where are these companies going in the future? Are they potential buying opportunities? And many of you know I prefer to buy REITs on an individual basis than perhaps own a real estate investment trust ETF, but you could also pick up something like, I think VNQ is a great ETF. I always just feel like REITs in and of themselves, management's the biggest risk, but honestly, each one might as well be a diversified real estate portfolio. And a lot of people always point out the fact that, you look at these payout ratios, especially on Realty right now of 242%. And a lot of people always jump to that conclusion that, these stocks are not affording their dividend, but it's honestly just accounting manipulation. And this is kind of the first level of manipulation that I see across a huge spectrum of companies, because the fact is dividends, if you're an earlier, investor, I think focusing on dividends will be truly detrimental, because not only are the companies you're investing in that pay dividends are actually being detrimented by them, because in order to pay a dividend, you actually have to show that as an earnings. And if you show it as an earnings, you have to pay corporate income tax, which means, here in Ontario, you're probably going to lose about 23%, especially if it's mostly Canadian sales. You're going to lose HST. You're going to lose the 13% corporate tax rate up to the first $500,000, plus then beyond that. I mean, all of that's going to deteriorate the total future growth of the company, because they're going to try and retain the cash and then pay it out to you, at which you might actually get taxed again, because if you're not holding it in a tax advantaged account, you're going to lose some capital against it. So you're going to notice a lot of companies that are dividend focused will try and avoid paying that tax. And they do this through accounting manipulation. And that's why it looks like a company that has paid its dividend for like 100 years looks like it can't afford the dividend, because they're going to use these tools like depreciation and amortization. If I can write down the assets that we're investing in, I can to basically subtract it from my earnings per share, therefore not having to pay tax on it, but still keeping the same earnings to pay out the dividends. We see this in the form of depreciation and amortization costs, which are basically these lines here. We can see Realty wrote off about $1.8 billion in 2023, which is up pretty significantly. It's almost $1.9 billion, which is up from 1.67. I mean, that's like a whopping, it's a pretty huge increase for depreciation of these assets, right? But then there's other things in here too, right? I mean, there's so much that goes in to write off. It's very complicated to understand these kind of balance sheets. And I honestly don't expect anybody to truly understand this unless you're like really enthralled. But I guarantee you the likes of Ben Malla, these huge real estate investment trust people like Grant Cardone, they don't understand this crap. They hire people to manage this stuff. They just know that real estate goes up over time. How do we own as much real estate as possible? That's usually how these people operate, especially a billion-dollar REIT. I have a hard time believing any human being can sit down and go through this company's entire portfolio and get a full scope of every metric of every town, every city, what those correlations are for, growth of like California. All these people are leaving, going to Vegas. Do we own properties in Vegas? Well, we're buying the Wynn resorts. That's something new that Realty did. Like, there's so much integral play into the future of the growth that, it's so hard to wrap your head around these. But we can see that, from a dividend standpoint, they basically, on an adjusted funds from operation per share basis, you really want to pay attention to just the funds from operation or the adjusted funds from operation, which the FFO came in at 98 cents. The adjusted was around $1, but we can see that their cash dividend was only 76 cents for the year per share. So really not that big of a deal, right? Like for the quarter, they can afford the dividend. They got lots of room to keep affording the dividend. So calm down, right? You're going to keep getting these increases. They got room to grow it, all this jazz. You take a look though, one of the other manipulation tactics that REITs do that many companies take into consideration is share dilution. This is something I talk about pretty detrimentally most of the time, because when I see debt and constant dilution, it's primarily going through a few different facets. It's going through, hey, we don't have enough money to survive in the future. You see this, we talked about this with some of these space companies on our last stream here. When it comes to share dilution, a lot of times they're just doing it for bonuses. Sometimes there's a lot of insiders that are cashing out. They get some stock-based compensation. You're going to see that with so many up and coming companies that are really big growth drivers, and it really dilutes you as a shareholder and can be very, very detrimental. And it is more often than not detrimental. So when we look at a company like Realty Income, we can see that their revenues actually shot up pretty dramatically starting at the period of around 2021, beginning of 2022, right? So how does a company like this get such explosive growth? Well, how do they do this? Well, with REITs, you can do one of two things. You can either increase, the rents, or you can buy more real estate. But how do you buy more real estate? You only got so much cash. You're paying most of that cash out to shareholders. You don't got a lot of retained capital. What do we do here, right? Well, we can't raise a lot of debt. We're buying multi-billion-dollar properties. It's kind of hard to just keep taking out debt. We don't want to constantly shrink our balance sheet. We want to keep a nice, healthy balance sheet. So what do? We go to the public markets and we dilute our shareholders. We take that money, we buy things like wind resorts that we think are going to pay off, presuming management has a good ROI on the return on equity. We could, on the return on assets and equity, that could really pay out. So let's take a look here, because as we can see from the shares outstanding, that's exactly what they did. I mean, literally from the beginning of 2022, they diluted the living hell out of shareholders because they thought that there was better value than just leaving you guys with your bigger pie, than putting it into some of these massive properties like wind, right? Realty's super diversified, but this is their growth driver here. This is how this company grows. And it has been very successful for them in the past. We're having a little bit of struggling issues right now because the market, higher interest rates, we could see the company struggle for a bit, but this is something to take into consideration. This company dilutes every single year. I mean, there's years where they diluted by up to 60, 50%. And it's incredible that the stock is maintained the way it's maintained, obviously through manipulative, structures within how they're doing this. But I want to show you a REIT that I have a lot of respect for. Now, obviously, Canadian REITs haven't been growing in tandem like US REITs have, but I do want to recognize what I think are truly well-managed companies. And I think Canadian Apartment Properties takes the cake for this. I've always been blown away by when the more I dig into this company, the more and more I'm impressed. I wish the dividend yield was a bit higher, but starting at 3.2 for the history of this company is relatively high. And I want to show you what I mean by this, because this is one of those few companies that I look at. And when you're talking about real estate investment trust, it's just so clean. It's just so clean. Let's just look through this. So this is purely a rental property, whereas Realty is more like, a mall REIT. It's more like RioCan in Canada. They have exposure to all kinds of retail focused, companies that are in their portfolio. Whereas this is just purely rental. This is the easiest kind of real estate to understand. So you have a number of suites here. They've got about 64,260, which has decreased over last year. So 2022 to 2023 might have sold some properties. Investment properties fair value also decreased a little bit. That might be to, who God knows where. Maybe they sold some properties, raised some cash. You're going to want to dig into that and figure out why. Maybe it's just because of suppressed real estate market, higher interest rates, who knows. But Canadian residential portfolio consists of 1,516, occupied AMR, right? So you got total Netherlands portfolio about 1,063. So these have increased a little bit here with the occupancy rating at always 98%. It's never really seemed to dip below that. But what makes this balance sheet so clean to me is that, you get the payout ratio has always been around 60%. They've done a great job at, keeping, the adjusted funds from operation payouts. You got operating revenue that continues to grow over time. You got a company here that isn't diluting shareholders. When you take a look at the, if we can find the, you got net asset value. I want to take a look at the weighted average shares, but we also got the, the mortgage here is 2.8%. It's slowly increasing. Total debt to book value is only 41%. Very clean that way. I was looking at the debt here. I'm trying to find the issued shares, but we've got total number of units. Yeah, right here. So I think it's that units, net asset value, capital. So net asset value, total number of units. So yeah, we should be right here, right? Because we can see the units have actually decreased from 171, and this should be in the thousand. We're talking about what millions here? We're in the thousands, right? Or is that just the dig a little deeper to get the exact numbers of that's in the millions? But it could be 171 million shares. But either way, the units have decreased. This is a company that's been buying back their shares a little bit, I think, which is nice to see. It's just one of those few REITs where the more I look into it, the more clean cut and dry the balance sheet is. It's so easy to grasp because you also get the idea of rental income increasing. For the rent on a company like this, because in Canada, it's really easy to understand that rent has exploded. And because a lot of these, areas are rental controlled, they can only increase the rent by so much until the tenant leaves and they get new tenants. But they're having this constant increase in turnover of tenants that always lead to definite higher, returns every single year in the revenue, no matter what, almost. It's just such an easy thing to understand for me that I'm very impressed. And I want to switch and talk over to the obviously the telecom side of this, because it's very similar in how they operate with debt and stuff like that. And a lot of you guys are going to be asking, I figured this would come up, Allied Properties. I'm going to maybe do an individual video on REITs coming up, because Allied's also very intriguing. Will you recommend cannabis stock? Honestly, no. If you know of any, send them my way. I'd love to explore them. But those companies, very scary because they don't have a moat. Be very careful, man. That industry, is very horrifying, because anyone and their grandmother can grow that stuff. I remember there was a cool time to own them before legalization, but after legalization, it's been kind of like playing a minefield game of trying to find ones that have any kind of stability. Because even I grew up north where there was like 3 or 4, legal grow ups that started, and almost all of them, again, through corruption and kind of breaking their license agreements and stuff and throwing stuff out the back door. Most of them ended up getting shut down. There's just no money in it like there used to be. You can go to any MJ shop and I'm sure you'll see price of all the price inflation that's been going on. The MJ products are the only thing that have come down in price. What's up, Kyle? Caught the live, but I'll watch it, the replay, no problem, bro. DGT, how long till bankruptcy? I'll take a quick look, and then I want to dive into some of these other, manipulative tactics we see in some of these companies. Dow Jones Transportation Average, GDG. I'm going to have to break this down. You got to be a little bit more explanative here. But let's get into it first and foremost, guys, because a lot of people like Verizon, and I have kind of, an attention. My attention's been driving to some of these because I find them super fascinating, and I think they're trading at relative values. And it's nice to see that SCHD and some of these dividend ETFs have definitely taken a liking to them. And if we take a look at what's most interesting here, like these are companies that haven't seen like a huge amount of revenue growth, but they've been stable nonetheless. But when you take a look at their earnings per share, like this is where things get scary, right? Because they've fallen off as of recent. And again, a lot of this has to do with the depreciation, obviously. A lot to do with the interest rate cycle kind of killing them here. This company, however, doesn't really increase shares that much, which I like to see as well. Verizon, these massive conglomerates, like their revenue, again, I think most of these have reached parity with the market in the US. How much more growth can there honestly be in the telecom giants without competing with each other? Because that's what we have going on in Canada with the likes of, say, TELUS, the likes of Bell here. Like these two companies, because Canada's immigration is so impactful that these companies are able to grow on the back of that immigration, making them a lot easier to understand. Whereas the US has some population growth, but I just think those telecom giants have gotten so big that growing is just becoming, they're giants, right? They're more or less income, producers for people that are more into retirement phases, very reliable income. But when you look at something like TELUS here, right, they've been diluting like crazy. This is something a lot of people complain about. But when you take a look at the revenues, like, again, it's very impressive that a telecom giant can grow revenues at the pace that it's actually been growing them. Though the revenues have been slowing, it will be neat to see if they're going to be able to keep this up. I'm kind of concerned about it, to be honest. I'm really expecting these to be, recovery-like companies when the interest rate cycle cuts come. But the problem is I think Canada is going through a cycle right now that's going to be a bit horrifying to watch unfold because our immigration got too out of control. I think people are starting to recognize that. So it'll be neat to see if they start cutting back immigration or what kind of persists. But I want to talk about the manipulation tactics, because these companies as well, when they're paying out almost 9% yields, you kind of got to question like how reliable is this when these companies have been doing so much manipulation as of recently. Bell's one of those companies that's very similar to Verizon. They haven't been growing a whole lot. They haven't also been, diluting a lot either. But again, I don't have a problem with dilution if it's like a REIT and you get some growth out of it like we've been seeing with TELUS, right? But when it comes to this company, I think one of the biggest factors to manipulation that is becoming very prevalent to the government, to a lot of people, is they're laying off a mass amount of people when they said they wouldn't, when they acquired a lot of small businesses. That was something the government approved them of, saying that they didn't plan on getting rid of these departments when it came to like these small time, small local TV stations and things like that. But then we get these executives that are paying themselves. When you read into this, almost it's kind of shocking, really, when you have a company that hasn't grown in years and you read through this, the company paid chief executive officer, basically an annual bonus of $2.96 million at part of a $13.43 million compensation package last year. The company disclosed in its proxy circulating shareholders that his bonus was down slightly from the $3.09 million in 2022, which is just crazy, right? Like when you look at what these guys are getting paid, and it's kind of crazy that we all just sit and abide this. And as shareholders, we don't get a say in this as much. it's kind of crazy that as shareholders, we can kind of vote these people in and out to some extent, but I don't think most people that own companies even take time to read the slips they get in the mail. They don't want to do proxy voting and all this stuff. And we just kind of always sit by and watch these guys get just paid ungodly amounts of money. Because you can see in February, it announced 2023, the result of BCE said it would cut 4,800 jobs, setting a difficult economic and regulatory environment that was largely a restructuring in the largest restructuring in nearly 30 years. But the second announcement in less than 12 months, in June, BCE announced 1,300 cuts, primarily in management, during the same time when they would increase the dividend by 3.1%, a slower rate of increase than typically in the past decade. So, we have a company that's definitely laying people off. They're cutting the dividends growing, which is insane at a 9% yield, but they're not really increasing at the same pace they've announced in the past. Yet we got these guys that are just giving themselves ungodly amounts of money, in my opinion. So it's fun reading through these articles and just getting a sense of it, because they're even though the compensation for these guys dropped by 160,000 or whatever, which is like, who cares? I mean, you're talking about chump change when you're bringing in millions, right? So, these are probably mostly awarded through stock compensation. Yes. I mean, this meant that the stock award portion of his compensation rose to 8 million from 7.5 million in 2022. His salary of 1.4 million was unchanged. So the guy's getting paid about 1.4 million. It really just shows you the disconnect between the employees and these guys that are running these companies, because I love that they can come down with a hammer and gavel, just lay all these employees off and, still make millions of dollars. And us as shareholders are sitting here still collecting our juicy dividends, but the stock's down. So, I mean, what can you say about it? What do you prefer at the moment, Google or Apple? Let's get into some of the tech companies. We can talk about these real quickly. I want to sell my Bell and Enbridge individual positions, just put it into VDY to simplify my life. I honestly agree. I think it's probably the best decision you can do. You get good diversity with VDY and some of those other ETFs, especially like XDiv. I know a lot of people like, but let's get into the aspects of when it comes to Amazon, Apple. And I want to talk about the manipulation of these companies again, just to give you guys a little bit of a better understanding of the scope of how these companies operate. Because I feel like people just think these companies, when they see these revenue numbers and what these companies put out, they just act like, I just feel like they don't understand the full scope of how these operate. So I just want to talk about Amazon real briefly, because I've always had a love-hate relationship with how this company operates, because they don't really make any money. They have started making money as of recently, but Amazon, if you looked at it from a fundamental basis, was always kind of a garbage stock from like fundamentals. But the stock has gone up clearly 1,300% in the last decade or so. So we're going to argue that it's a junk stock? No, because it's not, right? Like, it's a huge infrastructure-based company. But what I want you to pay attention to is the fact that they have no profit. Like, they're basically operating margins and net margins are garbage. I mean, we're talking about 5 to 6%. I mean, you go to look at a company like Microsoft, software companies, like their net margins, like, I mean, you look at the operating margins of a company like NVIDIA that are at 70%, and you're like, why does Amazon have such garbage margins? Because Amazon, they don't make their money. If we take a look at the revenue here, when you see this insane amount of revenue, and I think this is kind of manipulative in and of itself, but when you look at Amazon's revenue of 574 billion, which is just, sickening for like, it's like one of the most sickening numbers I've ever seen over 12-month trailing. But what you have to recognize is this isn't actually Amazon's revenue, right? Like, this is revenue that has to get paid out. Like, this is basically, it's like if I want to host my product on Amazon and I buy it through Amazon, they're counting that the sale for a product that isn't really theirs is revenue. And even if it is their product, they're marking down as revenue. They're selling it at basically a loss just to build up this massive infrastructure. Like, I'm going to show you where Amazon's future lie and the real value lies in this company, because this company is an infrastructure company. Really, at the core heart structure of Amazon, they just want to be the primary infrastructure of the entire shipping of primary e-commerce in the Western world, as far as I can tell, right? So when they're making 574 trailing 12-month revenues, that's why they're only getting like 5% of that. They're making most of that 5% is coming off the likes of AWS. It's coming off their other businesses. They're losing money like crazy when it comes to the primary aspect of their business. They've always lost money. They never make money, but they're going to start making more money than anyone can possibly imagine. And it's going to be an inevitability because of the robotics, right? I mean, AI in the future of robotics is something that is going to take Amazon into a level that no one's going to be able to compete with. It's going to make them a monopoly, where it's going to be impossible to run e-commerce outside of Amazon. Like, they're going to make this so cheap and so affordable for everybody. This is why like Shopify tried to compete with Amazon by doing warehousing and shipping, until they realized how insane it was, how costly it was. And guess what they did? The interest rate cycle killed them. They were friggin' annoyed with not making profits, because that's all people care about now. So what do? They sold off their entire warehousing division. Nobody wants to compete with Amazon at the level they're competing with. And eventually they're going to get these costs cut down so much. They're going to be making eventually $1 trillion in shared revenue between everything that they're doing, that they're going to become an unstoppable force where, like, again, it's just going to be nuts. These companies are getting so big now that they're monopolies, but governments don't care. And a lot of this has to do with self-interest, which we'll get into in a moment. But you're asking me about Apple, right? Apple and its own likes. Apple, I feel like, has this golden stamp of approval from like the entire economy about how we feel about it. Is Steve Jobs, these legends that really kind of remind me of Elon Musk today. And people are like, oh, how can you compare Elon to Steve and all these great icons? But everybody that knew Steve Jobs thought the guy was an a-hole, and no one talks politely about him, not even his business partner, Steve Wozniak. Name one guy that worked at Apple that ever had anything positive to say about Steve Jobs, right? These people were kings at manipulating and building out, global infrastructure where you'd had to go to China and forget hiring Americans. We're going to hire this out, make it super affordable. Without China, there is no Apple. As much as we crap on China, like, people just don't understand, like, the insanity behind these companies. And again, a lot of the manipulative tactics that have gone on over time, like Apple was ordered to stop importing watches with blood oxygen features because they basically like bought out the employees and almost just basically ripped this entire company off, because I don't think Apple wanted to buy them out, and they refused. So Apple said, well, if we can't buy you, we're just going to beat you and take your whole employees and staff. And it's like one of the most basically monopolistic, crazy behaviors ever. The problem with Apple is that they can't be stopped. And I think it's one of the benefits, because now that they're going to court, and there's a lot of people in government that want to start saying, like, you guys are having these monopolistic behaviors, like maybe we should cut the business a bit, or make it so you can't do these certain things with the App Store. However, you have to recognize that there's so much self-interest in politics today that these people will go to Congress. There'll be a few people, just like there is in every court case, that are having the big problem, waving their wand, being like, there's people that are mad at you. But at the end of the day, like Congress, like Bell, like all these companies, there's individuals with self-interest that probably have huge ownership in Apple, have too much respect for Apple, think that Apple is the golden child driving huge amounts of trillions of dollars of value to the US economy. Why would we want to hinder them, right? We're not China. We don't want to hinder them. So let them continue their monopolistic behaviors. And I think that's what's likely going to happen, right? Because there's just too much self-interest at play at this point, and these companies are too big to fail. And, Apple is, there's just so much money being shuffled around. You don't know who's paying what parties in the future. It's just so hard. And, I got a lot of respect, obviously, for, Tim Cook, but you got to recognize that they look so clean and caught up from like the front facing idea of things. But I'm sure when the doors are closed and the business actually, they probably got like a whole war plan built out for the future already, especially when it comes to AI. But let's talk about Tesla real quick too. And then I'll kind of get back to your comment and question there if I had to pick one or the other, because I do love both of these companies for their own rights. But when it comes to Tesla here specifically, I got a great deal of respect for Tesla, because I still don't think people recognize what's coming. I think we're back into this 2019 phase where everyone's like, Tesla's an expensive company. And it's like, yeah, but so is NVIDIA. And so is well, I don't want to put them in the same basket, because I think NVIDIA needs somewhat of a correction here. But the reason that I just think these companies are so intriguing to me is because, like, there's no fundamentals you can look at in business. When it comes to things like these real estate investment trusts, like, you can get such a grasp and a reality of how these companies operate just through their balance sheets, because they are just very infrastructure. They're very core businesses that don't have any future prospects of changing. They're just, the only way they can grow is buy more real estate. That's it. It's so easy to look at a balance sheet and get the clearest picture of what those companies do. But when you look at companies like Google and Apple and Tesla and Amazon, you can't put a value on these companies, because you don't know what the future is going to be. And I always laugh when the likes of Warren Buffett say, like, I wouldn't bet against Elon, but I wouldn't bet on him either, right? And same with a lot of these tech companies. And the reason that Warren Buffett avoided so many of these companies is because he couldn't see the future. And when you're managing billions of dollars of other people's money, you're better off at placing a more surefire bet. Now, that surefire bet has costed him so much of shareholder return. And shareholders don't bitch, because they made a great return. But because he's missed out on so much technological change in society, it's costed them a lot of future. And that's what Warren Buffett says his biggest mistakes, right, are the bets that he didn't place, because, for one reason or another, even though he knew they would have been great trades. However, when you're looking forward as an investor, you have to recognize, especially as a younger investor, that valuation doesn't mean as much as the changing and placing yourself in this kind of chess game of where society is going. And when you look at the value creation of genomics and AI and self-driving and a lot of the stuff that Tesla's working on in the efficiencies and how it offers better efficiencies to things that people don't want to have changed. That's at the end of the day what you're asking yourself with companies like this. Are they offering better efficiency? Is Amazon offering better efficiency than what existed with FedEx? The answer to that is yes. They might be expensive, but if that efficiency continues into the future, the company is likely going to continue to excel in its growth. Tesla's kind of in the same boat. They're getting more efficient with self-driving. Their cars are more efficient than traditional internal combustion, even though everyone wants to argue that. Like, it's hilarious. Like, they're somehow, me and my dad were having this fascinating conversation about carbon emission. And people, for some reason, just like oil. I don't know what it is. For one reason or another, they're just like, well, you have to mine lithium and you have to do all this stuff, and there's no way it's just as efficient to get an electric car. But I'm like, do you even understand how oil operates? You gotta get that shit out of the ground, right? The amount of carbon emission it takes to do that in the first place. You got to ship that shit to a boat burning more oil. You get that stuff on a boat. Boats have such dirty consumption of oil. It's the dirtiest fuel that's ever burned on the planet. It's so dirty that shipping container, actually most of Canada's carbon emission comes from import and export, not from what we burn here, because boats are dirty. They're so dirty at city ports. The cities don't want the smog coming off the boat that they have to tug them into the harbor. And then you take the oil off. You got to burn more carbon emission getting it to a facility that can basically turn it into gasoline, where if you live near one of those facilities, the likelihood of getting lung disease goes up 50%. Then you got to ship it to a gas station using fuel. Then you got to get it from the gas station into your car. And then by the time your car burns that oil, you're only using 50% of the energy, because 50% of it is wasted to heat. I don't think people appreciate how you could do anything and be more efficient than oil. Like, I always think it's so funny, right? So when I look at Tesla, I feel like people are just stuck in their ways and they don't see the efficiencies that are coming. So I think the manipulation that goes on because of how disconnected, and how it reminds me of like the battle of the iPhones and the computers, right? Like the more you look back in time at the major innovations that took place, and everybody just argued about it. They didn't want the change. Like, people get stuck in their ways. It's just the way society works. You're always going to have a yin and yang. But at the end of the day, if you just pay attention to efficiency will always win over time. The better mousetrap always wins. It always surfaces to the top, right? Because people want margin. People are greedy. Capitalism inspires this, right? So when you look at these things like routers and writers here and all these people, especially at the scale of Tesla, you get this mass manipulation that goes on, right? Because all of a sudden, because there's so much controversy around a stock like this, because again, you see how heated I get, how heated the conversations get around these kind of topics, you can have writers come out, write an article that is likely complete BS because there's some insiders that want to short the company. I mean, could you imagine if you had options against Tesla this week when Reuters released this and the stock dropped 5-6% within half an hour to only rally back and return all of those gains? Like, I mean, this is the whole different level of manipulation when it comes to individual stocks that you got to be super hyperbolically careful about. It can lead to great buying opportunities, great losses if you're leveraged, and these things come out of the whirlwind with controversial companies. So that's another like form of tactic of manipulation that I find just utterly fascinating. Now I'm going to just kind of abbreviate to a few other topics, but maybe we can get into a couple Q&As here about this. Out of Tesla, Google, and Apple, what's your favorite? So honestly, I like all these companies kind of in an equal level. To be perfectly frank with you, the reason that in 2022 I put all of my money into the S&P 500 was because when we go through rockier periods in the market cycle, that it's very hard to tell what companies are going to come out on the other side of it with more success than another one. Because I mean, Meta, for example, dropped so much, and it took a lot of guts to ride Meta down. And the only one that had those kind of balls was my wife. She rode Meta to the bottom and back up to the top. But for me, when you're owning a whole portfolio of individual stocks and you go into a shifting market environment, holding companies like this can be very terrifying, because if they are overvalued in a growth market and we shift to a decreasing market, you will quickly realize how fast these companies can drop and how fast your portfolio can correct. So I would rather own tech companies. And again, I know this is like hypocritical because I'm buying them individually, but again, I can try and abbreviate why. Probably not the best reason why, but still, I think you're better off owning the QQQ ETF. You're better off owning things like the S&P 500, because as the ebb and flow of these companies come in and out of favor, people hate that the S&P is 30% owned by the top 10 holdings of these tech companies. That is actually a bullish reason for me to keep buying the S&P. I love having the leverage in these companies like Amazon. I think there's still so much damn growth potential, and this economic shift to AI that's going to be horrifying in the initial rush is going to be a boom cycle that I think is going to propel the market to higher efficiencies and gains, and at least until the economic collapse comes, because the AI apocalypse isn't going to be like freaking Terminator. It's going to be capitalism literally falling apart as we know it. And I don't know, like, let's not get too conspiratorial here. I had this old guy telling me I'm a conspiracist. I'm like, I'm not conspiracizing shit. I'm like, if you can just look at the common sense chess game here, where one piece moves this way, that piece is going to move that way. If you understand basic capitalism and how companies grow, we're going to get into an economic collapse by AI. It's going to be an inevitability. But still, okay, so just buy the S&P. Let's roll back a little bit. Let's not get too out of control here. But buy the S&P. It's the easiest thing you'll ever do. You'll get great growth, all that stuff. Now, why am I buying these stocks, and why am I picking them at certain kind of time frames here? Because obviously the market, I think, is unfavorably, beating Tesla up. They're unfavorably beating, they were unfavorably beating Google up until now. Recently it hit an all-time high. Apple is now getting unfavorably beat up. And I think this is the best time to buy these companies, not when they're flying to those all-time highs, but when they're in a less favorable position, especially if you think they continue to hold their moats, they continue to hold favorable, efficiencies, even in a tough market environment. And you might have to ride it for, a few years or whatever, but I wasn't buying Tesla at the tops. Just like I don't really feel comfortable buying Apple at the tops, or even right now, like Microsoft. Like Microsoft is trading at such wicked, insane premiums. I mean, you take a look, you could buy Tesla. Again, I don't think Tesla's a favorable PE justification because they have a lot of one-time, income things. So let's not, I won't do the sharing of Tesla versus Microsoft, because it's just too hard to tell in this market environment with how difficult the auto industry is. But when you look at Microsoft trading at a 38 times multiple, probably one of the best businesses on the planet. But my God, the best time to buy it was down here, folks, when it was down 27%, not when it's up 100% from just a year ago. I mean, my God. If you take a look at it, like, yeah, they're growing at it's 12 to 17%, but you can't justify this unless we get up. Like even back here in 2020, 2021, when it was flying up, growing at 20% clips, it wasn't trading at that kind of a price to earnings multiple. Right? Let's take a look here real quick. Where are my price ratios? If we take a look at where we PE right here. Okay, so if you take a look at the price to earnings here, I think you're going to find that like this is one of the highest periods that Microsoft's ever traded, and it does kind of resemble the AI bubble that we're in, because certain companies are getting favored in this AI boom and certain companies aren't. Google and I think Tesla are huge AI companies. That's why I bought Google aggressively, when I was trading down here and it wasn't rallying with the rest of the AI market, because they were just getting unjustifiably beat up because of some negative PR around their wokeism and all this stuff that doesn't materially affect their balance sheet. So I'm like, why not buy it? Microsoft is not in that phase right now. Like they're too favored in the market, and it's just ridiculous when you could have bought it when it was flying up 20% at a 30 times multiple, or even like when it dipped here, it hit a low of 24, but at a 38, which is literally the highest it's pretty much ever traded at. I think it's due for a correction to some degree, unless it starts blowing numbers out of the water, which is still a huge possibility, right? So like I said, when you're buying tech companies individually, I would buy them in ebb and flow. If you like buying them individually, like me and my fiance have been doing, just buy them when they come in and out of favor, and presume that no matter how bad the media gets, that if these companies truly have favorable, power, which they do, their balance sheets are insane. They have insane amounts of cash, buy them. And you probably see outsized returns. Thoughts on gold stocks? I would avoid gold stocks. There's some good ones out there. We can do a few examples real quick. There were a couple other companies I wanted to talk about. I can come back to in a moment. There's one gold stock that I kind of like a lot right now. I don't buy these, but I watch them pretty religiously. Is Caliber Mining. I actually work with this company. Not for my channels, but in my job, I work for this company. And they're one of these few companies where they're trading at an incredibly low multiple. They've crushed it year after year. They've always beaten their milestone and their guidance expectations. Gold is trading up insanely high. And this company just is still trading at a very favorable multiple. Now, the reason I won't buy these gold companies is because, well, I mean, they're not bad buys, actually. I shouldn't say you shouldn't buy them. If you're into precious metals, we're kind of going through that boom right now. I mean, what's gold trading at over the weekend here? Let's just take a quick peek. I don't want to deter anybody from any kind of stocks. If you're interested in it, I always think there's a market for it, and there could be some good value in gold's, back up to 2,300 an ounce here. I just always feel like commodities are ebb and flow. Like if you're buying the Canadian Canadian economy, you're getting a lot of oil, and oil has always been like one of these ebb and flow. Commodities have just always been some, you either love them or you don't. If you love them, they're great. Like Warren Buffett, for example, loves them. Like Warren Buffett, he's been buying that stuff up like crazy. And speaking of Warren Buffett, let's talk about how this company's done so well. I've always been impressive here. Actually, one second. Let me almost got off my StreamYard. Let me go back here. Berkshire. Berkshire is another one of these stocks that I think most people don't appreciate it enough for how well they've done. And I think there's a specific reason why they've done well, because I was kind of making a bet they were going to underperform the S&P 500. But lately, they've been keeping up performance. But how have they been doing this against the backdrop of the likes of Apple that has been basically on the downtrend, right? So let me just do a comparable here real quick to the VOO. I always find this relatively impressive, right? Like, look at, so Berkshire, over the last year to date, has actually been outpacing the S&P. Over the last 5 years, it's now above. They've always been kind of trading close in line, but lately has actually been outpacing. Now, if you conclude that, the dividend from VOO, you'd actually be better off than owning Berkshire. But what makes Berkshire so impressive is the fact that, their earnings have been growing so substantially against the backdrop of a lot of their equities not performing well. So why is this? Because we can see they're back growing in double-digit territory, right? Like we're talking about this huge behemoth that just owns a diversity of companies growing at a 20% clip. Yeah, if we look at their portfolio, right, like Apple makes up a huge percentage of their equities, and they've been actually selling Apple off. They have an absolutely absurd cash position. They're not really investing a lot of money right now. And they even own the likes of Amazon, which I always think is really cool. They got Amazon in here. So why? How is this possible? I think the one thing that kind of takes into consideration is the fact that their insurance companies is a huge proponent of their entire business, and the insurance aspect of their business, like I don't know what happened to insurance companies this year, but I don't know if it was an overhaul. I don't know if it's AI. I don't know if it's software. I don't know anything. So maybe if one of you can tell me that work in the insurance business, why are insurance companies blowing up? Buffett owns Geico, these huge insurance conglomerates. And they've been probably more or less just crazy. Is Geico publicly traded? I don't think it is. Is it how you spell Geico insurance? Is Geico publicly traded? I'd be curious to take a look at this actually. Geico insurance stock. Is this thing can't be public? Oh, it is. No. If you look up Geico stock, Berkshire Hathaway comes up. So I guess you can't even find Geico. But I have to presume that with insurance companies that are just exploding. I mean, look at this growth on Manulife. Just, it popped 38% just within the last few quarters. Sun Life Financial, like this is another one, right? Like what is going on with insurance companies right now? Why are they booming so much over the last year? I'd love it. Anybody who works in the insurance game, let me know, because across the globe, insurance companies have been crushing it lately. So, Berkshire, I think that's what's been favoring them most recently. And like one of the reasons their earnings have done so exceptionally well. Otherwise, I can't figure it out. I've been looking at Starbucks and Nike. Starbucks, definitely an interesting stock that I've always said I'd buy. But honestly, I think McDonald's is the better play when it dips. Starbucks is, like I said, I'm one of those people where like when it comes to retail-like companies, I only want to buy the ones that I personally use and understand. And Starbucks to me was always one of these things where like, and I always just thought it was kind of pretentious. Like, who's drinking $5-6 coffee a day? Like, I've spent my entire life avoiding companies like this, not as investments, but as just, a lifestyle to get rich. So I've always wanted to buy it, but I never bought it because I just don't drink the coffee, and I always thought it was just far too expensive. Whereas I'm more of a McDonald's person, and I've always believed that McDonald's, more real estate oriented company that's been, that's just continually done exceptionally well. McDonald's is just the real estate they own, everything about them. Same with Starbucks. Like I said, they're ebb and flow. I think if you buy these on dips, you'll probably do pretty well, but I don't know the future of these companies other than with McDonald's specifically. AI has a better chance of taking over, and robotics will definitely start taking over McDonald's. I don't know how well that works with Starbucks. Maybe. I don't know. I just feel like the baristas and like the whole environment of it is pretentious enough that they'll always have baristas. Like there's primary coffee and like little baked goods. It seems like more of an atmosphere than it does like more of like a factory line. I feel like McDonald's operates like a factory line almost. Whereas I don't think Starbucks has something that's similar to that in the back side of it, right? Small cap ETFs, good options. I think there was the Vanguard. I think it's one of my favorites is the Vanguard Small Cap Value ETF. I think that's the one. It's called VBR. This is probably my small cap recommendation for anybody that's interested. It actually is outpacing a lot of the small cap markets right now. These companies range up to like, I think 5 billion. I don't even know. I have to look, but I would dig through here. This small cap ETF has done exceptionally well. So something to take a look at. Thoughts on gold stocks? Yes, AQN has been a good swing for me. Congrats. I lost some money on that one. I think a few people I know lost some money because we were buying the tops. That one was a little bit unexpected. Taking a look at AQN as of recently. Yeah, I mean, you must have been playing the swings down here then, because it jumped up about 21%. Yeah, this is one that I'm not as aware of. It kind of reminds me of what was that other Canadian utility they got wrecked? Lavalin. I think it was Lavalin was the one that had like the government crap going on that dropped. Kind of Algonquin really reminds me of the Lavalin collapse. Very similar. Best Canadian bank to own. Banks, man, the Pokemon cards, got to collect them all. Can't just own one. If you're going to own one, ooh, man, tough say because there's so many on discounts right now. I do like National Bank because it's the biggest grower of them all. I couldn't just pick one though, because Royal Bank gives you the best exposure to Canada, and Royal Bank just took over the entire Canadian counterpart of HSBC. And if the population continues to grow, or at least scale, and I'm sure it will to some extent, they're going to do well. BMO is probably my least favorite one of the bunch. I don't know why I always pick on BMO. I just never liked it, even though BNS has been like a worse performer. BMO has actually done pretty well. Personally, I've always loved BNS because I've used them a lot. A lot of people hate them. Like I said, it's not like I can never really pick one. I like them all in combination. Buy something like H Bank. It's probably the best way to own them if you're going to buy them, or just buy VDY. VDY is an amazing way to earn them. Are you picking up any TD shares? Yeah, and VDY, 25% of the holdings are just Royal Bank and Toronto Dominion. You could buy these on dips. Honestly, again, this is like buying big tech companies in the US, right? Like it's so out of favor right now because they've done manipulative things. And honestly, I think right now, Toronto Dominion Bank so much reminds me of what's the big bank in the States that went through all that garbage with their employees and the manipulation of them, like promoting garbage and forcing, like they got sued for it. Warren Buffett owned it. It's not Bank of America. What's the big bank? Wells Fargo, right? Wells Fargo stock. Yeah, this is another really fascinating one, right? Because you look at the garbage that they went through, and what a friggin' recovery. Whoo, baby, man, you bought those dips in 2021. You thought big banks could go under, too big to fail. Yeah, it's not 2008 anymore, is it? You can do some manipulation tactics, pay out a couple $2 billion in fines, and back on track, 161% return, baby. That's kind of reminding me of what TD is going through right now. It's like they're never going anywhere, but they're going to be in tricky water for a little bit with all this regulatory crap, and they might get fined, sure. But who gives a shit? Buy the dip. It's always worked out. It's like, yeah, it's always worked out. It's always worked out. Tesla hands down. What other hot stock does the Miss suggest? So she's not, as I don't know. Like, I think she's a better investor because they always say women are better investors because I think she's more passive than I am. I don't think she doesn't look at the markets. She doesn't really pick stocks. She just understands that like big tech companies are where it's at. She when we were really into it, like she still holds MindMed. She still debates on whether she should sell. Even my mother holds MindMed, and she's like, "Do we sell MindMed now? What's up?" We still hold some shares, and we're back in the green on those shares, surprisingly. But honestly, like, it's too hard to say, right? Like the stocks that I think are on better deals are like stocks that we already hold. And we're just buying. Most of our money right now is going into index funds. Like that's the easiest place for us at the scale of our portfolios. But honestly, like if I'm buying individual stocks, and even with her recommendations and stuff, like I look at companies like McDonald's, like Hershey's when they dip. I love Hershey's. I eat so much damn candy. I got to stop. It's disgusting. Stock's down 30%. I'm really happy that the likes of SEHD, I always feel like I'm doing something right when the ETFs that I hold start weighting the companies that I like, that I think that, even though I'm not buying them, again, just because I like something and I'm not buying it doesn't mean it's not a good stock to buy, because I only have so much money to go around. But you look at something like Hershey, right? And I was always just like, man, I should be buying this here. And I'm just so happy that SEHD started adding it to the portfolio, because it really goes to show that, sometimes it's a pat on the back that I can still recognize some value out in the market. I was picking DOO over the winter, huge jumps the last few weeks. So what's DOO? Do stock. Let's go, baby. What do we got? BRP Inc. on the TSE. Yeah, so it looks like we've been bumping up a little bit, been pretty flat since 2022, but holding up pretty good against the market environment. This is a holding company from Bombardier, Recreational Products Inc. So you got a personal idea what it is, like a dirt bike. What are we talking about when we're talking? Let's take a look here. This logo looks super familiar, but I want to see what their products are, because Bombardier produces a lot of stuff. A lot of stuff. Yeah. Dirt bikes. What are we talking about? Snowmobiles. Yeah, you're really into the sporting stuff, eh? This is like, you must be, I'm curious if you're an earlier investor, because I always like the passion that people find stocks like this. I always remember when I was a lot younger, the first two stocks I ever bought. If I was smarter when I was younger, I'd have just bought like the S&P. But then again, it worked out to my favor. But I was buying like the MJ companies, the cannabis stocks, and I'm buying like Northland Power, which thank God I sold. How is the old Northland Power doing? I always feel like when I was a younger investor, like it was what I was interested in. Yeah, I'm glad I got out of this one. It's a shame that this went the way it did. Man, this one I sold it at such a good time back here in 2022, but this one held a close place to my heart. Both the stocks that I owned originally just eventually got destroyed. It just shows you the risk of long-term investing, right? I mean, Tesla could very likely go through something like this. I mean, there's risk with companies, right? But I mean, man, do I miss these days back in 2014? These were the days when I was on forums before there was like YouTubers. And I'd be like, what am I interested in? Well, they're going to legalize this green stuff. Oh, I know that the green energy future is a big deal. I'm going to buy one of these big wind turbine companies. And it really worked out. Thank God I took profits, because long run, it had been a different story, and my portfolio wouldn't look like it does today. But yeah, that kind of reminds me of what you're doing here. I'm sure you're really interested in the product. So, it's nice to love what you're buying. It makes it that much better. Nike, you want me to look at Nike real quick? I invested in Aurora. Yeah, 98% value erased. Law lesson learned. It's simply too expensive for them to compete versus the black market. Too much overhead and government regulation. Yeah, I know. That was a shame. It would have been really cool if that stuff worked out. Nike is one of those stocks, man. Do we think Nike's going to do well? I think I saw Everything Money talking about Nike favorably. They're trading down quite a bit right now too, I don't buy luxury brands, but you might be able to tell me more about it than I will. Because these things come in and out of favor depending, but Nike owns like the shoe market. So, I mean, if you're into shoes and you think it's favorable, by all means, make it part of your individual stock positions. Yeah, it's more of a short-term trade coming out of this interest rate cycle. I think we'll do well. Nice, man. Good to hear. Yeah, I'm sure it will actually. I mean, when it comes to the products like that, people tend to buy them on debt. I mean, my buddy bought a boat on debt that he recently sold, I think. A lot of people buy their toys, they finance them, right? For banks like CWB, to each their own. Yeah, blew a lot on NFTs. Did you, Vic? I don't believe you, sir. I want to see the NFTs you bought. I want to see them NFTs. Were you milking kitties like Dumb Money was? Are you buying those kitties that you could milk and collect some more coins than SPACs and psychedelics? I think you got it backwards, bro. You got it so backwards. First it was psychedelics, then it was SPACs, then it was NFTs. We got a different order, I think. SPACs were fun. That's what that is. Shamath Palpatio, I don't even think it'd have a podcast if it wasn't for his SPACs. Everyone loves his SPACs. Everyone's still talking about, Palantir, the Palantards. It's like, probably shouldn't be making fun of them. Heaven forbid. I criticize Palantir and I lose subscribers every time. What do we got? How does Uber survive the self-driving taxi network? They don't, my friend. They don't. They get wrecked. NFT ETFs. Oh God. I couldn't imagine. Could you imagine buying an NFT ETF? Yeah, bro. I get ready, man. I'd buckle up. It's going to be an effing rocket ship for the next 5 years. I don't know what to do. We were just talking with my brother's kids because, we were hanging out with some folks and we were having a real conversation about how these kids that are 9-10 years old, what their future looks like. And I'm very pleased to say that the people that are around them, they're very technologically savvy, and they've been saying the same stuff I've been saying to them, like get into a trade. And I'm glad that they're inspiring the next generation to get into something that's a little bit more sustainable, I think, against the future of what's coming. And I'm really glad. And I'm thankful because it scares the crap out of me, especially I don't have kids. And if you have kids, this is something you really need to take into consideration, because I know people right now that are in university to become lawyers, like just so many jobs. And I'm sitting here and I'm like, how do you feel comfortable? Like, how do you feel comfortable blowing a couple $100,000 on an education that's likely going to be worthless? And it's so hard to tell someone that, because like, I don't want you to uproot your entire existence because of the future, but like, you have to recognize what's coming, right? I mean, like, everyone thinks I'm like joking about this crap. Like it's just some kind of far-fetched conspiracy theory. And I've never felt so like on this edge of this conspiracy in my life. Like I went down this rabbit hole and I'm using it at my job. The hardest part of my job anybody can do now because of ChatGPT and editing software that edits videos for us. I'm like blown away that it took us all of 2 months to implement this into my job. And I know YouTubers that aren't disclosing it yet that have fully AI-tized themselves. They're fully digital. If you are a talking head and you think you're going to have a job at CNBC in the future, hell no. Hell no, you ain't. There's going to be 24/7, 7 day a week talking heads that are going to be fully generated, pulling all this news as it's happening in real time, probably pulling it from social media, pulling it from God knows where, trending stuff. Like, I just don't think people understand music, porn, all of it. It's gone. It's fucking gone. Oh God, man. I look at these. I was watching Caleb Hammer. I don't know if you guys saw that porn star that was on there. And the girl's making millions. And it's just like, oh my God, I'm surprised she isn't generating herself yet either. Caleb Hammer, man, that guy's funny as hell. I like seeing all those people in their different jobs. I feel bad those people that are struggling already. I'm like, you think you're struggling now? You wait till the future hits. Have you seen YouTube has made an attempt to counter AI creators? Yeah, they should. I mean, to some extent, that like, this is the problem, right? Like YouTube is always coming down, and I know, and I don't want to get into it because like there's so much manipulative tactics that go on with bot views, like black hat and like gray hat. Like if you know kind of some of these like terminology about like faking stuff and generating like YouTube videos, like and buying views and buying subscribers, like YouTube did a huge purge like 2 years ago where they wiped tons of channels that were buying fake views and all this stuff. I mean, there's so much manipulation, and YouTube's pretty good at catching it, but they're probably using their own AI models to figure it out. But yeah, I don't know. There's a channel right now on YouTube. It's called the fake. What's that actor's name? Leonardo DiCaprio. Let me show you this real quick. Have you guys not seen this stuff? Like, this is pretty impressive. It's kind of primitive because there's way better versions, but this guy's pretty good. The fake Leonardo. How do I spell it? Yeah, there it is there. Just take a look at this here. Let me see if I can pull this up. Yeah, this guy. Have you not seen this channel? Where's the channel? There's a YouTube channel for it. Anyways, I'm sure.
Wow, you can really dance. Wow, you can really dance. He went.
Yeah, so this is completely fake, right? And this guy built a whole YouTube channel off this, which is super cool, right? I mean, there's some fake Barbie, fake everything. So, and they're not like hiding it. They're like, this is fake, but they're growing. Like this channel has 37,000 subscribers and they're just fake versions of people. It's crazy, isn't it? Like that you can make money off some. I'm surprised YouTube hasn't cracked down on the likeness thing yet, but haptic technology could revolutionize. Yeah. Well, wait till there's robots walking around. Like, woo, baby, when we get robots, man, I don't think people are even going to want to watch the AI generated stuff anymore. Strip clubs are going to have a whole different variation going on, baby. It's going to be like cyberpunk. I have someone I work with who is in charge of social media, and all he does is use ChatGPT to make posts and makes like 50 to 60K hardly doing anything. I hate to say it, but it's part of my job too, man. Anyways, this has been a fascinating conversation, folks. Before we get too down this rabbit hole, I'm going to have to do some more AI live streams because it's just so quickly evolving. But stay cool, stay awesome. And as always, I look forward to catching you in the next one. Peace.